Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A reactionary bullish thrusting pattern type action yesterday in response to Friday's big drop and last week's weekly key reversal down. However, the market only just made it over the short moving average, currently 116.03, and a November 2020 low at 116.02. Nevertheless, it was a close above both, if only just. Overall, we are still in the follow-on from the recent cat's ears pattern formed over July to September. The neckline above is made from the combination of the 38.2% Fibonacci line of the March 2020 to January 2021 move at 116.94. The neckline, currently 116.81, of the August to September 2020 head and shoulders top. We also now have the declining short medium moving average, currently at 116.92, entering the frame as fresh resistance. Going back to the original cat's ears pattern, we still have a potential target X below for this in the 114.5 area. The key to achieving this target would be the market maintaining itself below the break line above, or lines in this case. All this comes in the shadow of September's monthly key reversal down and last week's weekly key reversal down. Looking at the even bigger picture, we are still nicely moving down in between the upper time, currently 117.41, and the middle time, currently 113.70 below, of the January to May bearish Andrews pitchfork. This pitchfork has run the whole of 2021's action. Bearish Andrews pitchfork action, that is. This pitchfork was run literally throughout the whole of the 2021 period. Now, so far today, a small attempt higher, but it's very limited so far. We have a lesser Fibonacci level at 116.18, and then not much until the break area again. Cable, aka sterling against the US dollar. A lower yet still indecisive spinning top yesterday. The market pierced once again the lower trend line, currently at 136.73, of the July to date broken sideways triangle. Interestingly, though pierced, the market closed right on it, this same broken trend line. The actual sideways triangle is made up from this lower trend line and the bearish overhead combination of the flatlining long moving average, currently 138.51, and the upper trend line, or if you like, the July to date downtrend, currently at 138.37. In between the market and this upper trend line, we also still have the declining medium moving average. That's currently at 137.68, and the slowly declining short medium moving average, currently 137.08. Now back to the market's actions and the pullback back up over early to mid-October. This has threatened a number of targets below for the sideways triangle. The market has already achieved the initial target X below in the 134.90 area, but the secondary target X1 in the 132.65 area looks quite distant now. Okay, the secondary target is, as I've often stated, harder to achieve. So perhaps just reaching target X1 may have been enough for that pattern. We'll see. Finally, I've droned on interminably about the longer term whole of the 2021 double top pattern, Adam and Eve type. I thought it was becoming more obscure as time moved on, and prices didn't. However, the late September to early October move down had revitalized the idea enough that I'd place some potential targets for this pattern. Now, there's an initial target X2 in the 133.60 area, and a secondary target X3 in the 131.10 area. With early October's move up, this big pattern was, still is I suppose, under threat, despite last Friday's action. I still suspect I may soon be contemplating targets on the upside, whether for the sideways triangle or for something else. Well, that last bit I'm still unsure of. So far today, an interesting lower open below the lower trend line, with only a small peak above this trend line before moving down towards the lows of yesterday, and a little bit more, but no more really at this time. It is not as enthusiastic as Friday's action, so I guess a question mark still hangs over this whole move lower at the moment. Euro sterling. A reactionary bullish white soldier yesterday after the bearish harami on Friday. This time, the market punched up through the cap of the old early April low at 84.70 and maintained a strong close up over it. Now, I have previously warned something like this was up, as we'd seen rising lows all of last week. Overhead, we now have the flatlining short medium moving average currently 85.27 and the nearby slowly declining medium moving average currently 85.35. Meanwhile below we still have the declining support from the old upper channel line currently 84.03 of the broken May to August bear channel. This somewhat unusual support had been enough to halt the decline since late September and most recently last Monday on a closing basis. Overall, I have recently put forward the idea of a large right angle broadening formation formed since late May. However, I'm inclined now to retire this idea as the market has stayed away from the lower channel line, currently 83.07, for way too long, and I suspect this pattern is morphing into something else. So far today, a slight move higher, but not really approaching the overhead short, medium and medium moving averages. US dollar against Indian rupee. An immediate countering bearish dark cloud cover pattern yesterday after Friday's bullish harami. Prices didn't move lower than Friday, but we still seem to have little support below until the 50% Fibonacci line of the April 2020 to February 2021 move at 74.63. Overall, we're still above the broken downtrend and trendline combination of the April 2020 to date move, currently at 74.37, which makes up the large April 2020 to date sideways triangle. This still gives an initial topside target X in the 76.36 area and a secondary target X1 in the 77.79 area. Obviously, the secondary target would be harder to achieve. All this uses two big assumptions. Firstly, that the break higher up and away from the sideways triangle is not a false break. Secondly, that the hesitation we've seen since mid-October may be a type of bull flag or bullish halfway hesitation type action. Now these are big assumptions. Just below the broken downtrend trend line, we now have the entering the frame the rising medium and short medium moving averages, currently at 74.29 and 74.22 respectively. Now, so far today, a further move lower below Friday's low and approaching that 50% Fibonacci line at 74.63. US dollar against the Brazilian real. A bullish engulfing pattern yesterday, not the hardest of things to achieve after last Friday's indecisive spinning top, but nevertheless it was a good healthy one, closing not only over the upper time, currently at 565.47 of the breached late July to late August bullish shift pitchfork, but also making a bullish white Mariposa in the process. Now, this pitchfork has shown, at least until recently, the bullish angle of attack since it was formed. However, we now seem to have an early September to date bull channel, currently 556.16 to 584.70, taking over the running higher, but at a more acute angle. If this carries on, then I may well retire the pitchfork. US dollar against the Mexican peso. A fifth bullish white soldier yesterday and a clear move higher, over the 50% Fibonacci line for the whole of the 2021 move at 2058.49. This was also a continuation higher from last week's weekly key reversal up. Now, this weekly key reversal up has raised some interesting possibilities. Now, we already had the idea that below we have the upper trend line, the recent broken descending triangle pattern as 2012.74 plus a mess of Fibonacci areas in that level. These had all worked in concert to hold a decline 2 weeks ago and caused the pullback up last week. So you can see there seems to be some power generated down there. Now yesterday, prices managed to rise as far as the old target X, the initial target for the descending triangle, in the 2089.20 area. This target had originally been achieved some 3 weeks ago. Overhead, we still have the secondary target X1 for this pattern. And that's in the 21.23.5 area. Now comes the interesting possibility. The rise last week may make the mid-September to date action either a topping action, such as a double top, or a possible bullish halfway hesitation, or a bullish halfway hesitation, I should say. At the moment, it seems the market may be leaning more towards the halfway hesitation idea than to the double top. The reason is that until last week, all the actions had been in the shadow of the weekly key reversal down from 3 weeks ago. This week we can see an alternative. The weekly key reversal up last week, which is going a long way to negating that earlier bearish shadow, possibly. This is one to watch. So far today, Another attempt higher, but getting stuck in the same overhead lesser 38.2% Fibonacci line, the 2018 to 2020 move. Now this same lesser 38.2% Fibonacci line held down the market in its rally back in October. So watch carefully how this all turns out. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZE Tofpik and ADM Investor Services International Limited. And here comes the final bit.